Welcome to the Winowitz Financial webinar series, and we thank you for joining us. Looks like we have a great crowd today. Thank you guys so much. My name's Trey Winowitz. I'll be your presenter. Today we're going to be talking about knowing stock market history and how that can help you position yourself to be in the best place financially for you and your family. If you're wanting additional information about stock market history, you can go to our website right there at traew.com, traew.com. Look through our radio archives, and we actually have a whole hour-long radio show that we went through in depth about stock market history. So some additional information other than this webinar that you're watching right now. A little bit about myself. I'm not going to talk a lot about myself. We'll just get to the point. But I've been in the financial services industry, if you haven't met me before, for over 10 years. Last year, 2011, I was Senior Market Advisor of the Year, top 10 finalist for Advisor of the Year, and speak all over the country, mentor other advisors, and most recently, not too long ago, spoke on the same stage with former Speaker of the House and presidential candidate Newt Gingrich. So if you're interested in learning more about me, just check out our website, traew.com. That's traew.com. Plenty of videos there, informational stuff, articles that we've written, so love to help you out any way possible. But getting to today's program, most of our clients realize that retirement planning can be a lot like climbing Mount Everest today. There are a whole lot of obstacles. It can be very, very dangerous, and just like some folks' lifelong dream to climb Mount Everest, retirement planning, sometimes people risk things with their money and lose it all. So it's very important in today's financial environment to choose the right guide to help you in these situations that we're in, financially, globally, in what's going on today. You've got to have the right guide that suits where you are in life and what it is that you're looking for with your retirement planning. What we're going to talk about today is stock market history, and everybody's heard before, those who don't know history are what? They're doomed to repeat it. So what we're going to do today is go through the very simple cycles that the stock market has and kind of educate you on what has happened so that we can expect what will happen in the future. Examining the cycles from 1930 to 1948. If you look at this, all these numbers are from Yahoo Finance, so you can go and verify any of these trends yourself. But just to kind of make it simple, this was the Great Depression. The cycles of the market generally run anywhere from 16 to 18 years at a time, and from 30 to 48 the market was flat. Now in a flat market you'll realize that the market doesn't go in a straight line. It goes up and down on a daily or monthly basis, but when you look back at the end of the period, it didn't do a whole lot at all. So the 1930s through 48 was just marked by the Depression, and we didn't really have a lot of growth or anything in the stock market at that time. 1948 to 66, this was a boom for our economy. If you'll remember, the stock market started and just took off after the wars were over. So in 1945, what happened? World War II ended. And after the war was over, we became a manufacturing nation. Job growth was awesome. People were actually moving into the United States looking for jobs. Unemployment rate was near zero. And it was just a great time economically for our country. In 1966 to 82, we went through a period called stagflation. And very flat line period. If you'll look back on the numbers, the Dow Jones Industrial in 66 was right at 1,000 points, and in 1982 it was still at 1,000 points. What happens with stagflation is, it's basically stagnant growth or declining growth in the economy while there is inflation. If you'll remember, in the 70s, this period was marked by cost of living rises, gas and oil prices rising, and then once again we were at war. So I'm going to think back to this slide. This looks a lot like today, and you'll kind of see why we're in the trend that we're in because of the things that are going on today. But 66 to 82, the market was flat. Now, the next cycle, from 82 to 2000, the market was up over 1,000%. This was actually the time, if you look at it historically, this was the biggest growth in stock market history ever. And most of our clients that we see and most people that we talk to either started following the stock market or started investing in the stock market in 1982 to 2000. Now, at this point, you pretty much couldn't do any wrong. So we'll talk about in the next webinar series. Tune in, make sure you listen to the next webinar. There are a lot of investor psychologies that people are operating under today that came from this 82 to 2000 period. But the fact is, from 82 to 2000, the market went up 1,000%, and this was the biggest growth in stock market history ever. So when you look back at where these cycles were and what would we expect to happen going forward, 1930 to 48, the market was flat. 1948 to 66, the market was up. 66 to 82, it was flat. 82 to 2000, it was up. Not only up, but it was the biggest growth in stock market history ever. Now, assuming nothing changed economically, politically, globally, we would expect potentially for the market to be in a flat or a stagnant cycle from 2000 for 16 to 18 years. Let's look and see briefly what's happened. Basically you can see the end of the 90s in this chart here. 1998, excuse me, and 99, the market was still going up, but it shows in the last 13 years, if you would have had $100,000 invested in our stock market, this is the S&P 500, would have gone up 37% almost in 2 years. But in 2000, I want you to remember, everything changed. Everything changed. How the market worked since then, how people should be planning, completely changed. So since then, and actually since 98, we've had a very flat market cycle. The holy grail of investing, the stock market, has only earned investors less than 1% rate of return over that period of time on average. And it's not because there haven't been times that the market was good and you could make some big returns. It's been, however, all the negative years that have been capturing all of those losses. And one of the big things that our clients understand in this day and time, in order to be successful, you have to remember this. Losses hurt you worse in a flat market. So the losses hurt you worse in a market like today than the gains will help you. Success in today's market will be defined differently. It's no longer the 90s. It's no longer choosing the highest rate of return possible. It's going to be making a fair and consistent return and not losing your shirt the next time the market cuts in half or goes down 10, 20, 30%. How much more money, think about it, would you have today if you just hadn't lost any money in the last two big corrections? You have to ask yourself, and most folks ask themselves before they come in to see us, are you really making any new money? As an investor, are you making new money? Or are you continually spending your time recouping old money you used to have? The other thing I'll ask you is, have you really followed your gut? There's probably times in the last 10 years that you felt like would be a good time to divest yourself a little bit from the risk of the stock market, to maybe take a few of your profits off the table and protect some of those gains. And lastly, have you forgotten 2008? So don't let anybody, turn you away from your gut feeling. Most of the time, some of the best financial advisors out there are you. So figure out what it is that you want with your money and do that with it. Truth number two, have you considered all of your alternatives? Insanity is doing the same thing over and over and expecting a different result. So in today's market, what you'll realize is the types of psychology, the types of strategies that you used in the 80s and 90s, and actually they worked back then. The market has changed. What you have to do to be successful has completely changed. So have you really considered all your alternatives, how to be successful in today's market? In the next few webinar series, we'll be getting to some of the alternatives and what our wealthy clients and what normal folks are looking at to see, hey, how can we be consistent? How can we be more predictable with our returns? And how can we avoid some of the stress of today's stock market? Well, guess what? You're going to have to open your mind. You're going to have to think about things slightly differently because today's market has changed. Lastly, in closing, facts about Mount Everest, and this kind of gives you an idea of what we might be able to help you with as a specialty or as our focus in our firm. 15% of people that climb Mount Everest die on the climb. Pretty noble. 17% die after giving up. So, they go halfway up the mountain, they decide this is not for them, and they turn around and pass away on the way back down. That would really stink. But the most important thing that I found in doing research on Mount Everest, and it kind of ties into today, 56% of the people make it to the crest of Mount Everest and die on the way down. So what that tells us is 4 times more people are dying after what we would consider to be the hardest part of the journey. Well, guys, in today's market, part of the journey is accumulation, but the rest of your retirement is the distribution phase. So if we're climbing a mountain, making it to the top is only halftime. It's only part of the game. Don't die on the way back down. Make sure that you choose the right guide to help navigate today's markets and someone who is a specialist at the second half of the game. We focus on distribution planning, on income planning, on avoiding losses and avoiding volatility. So if that's what you're looking for, maybe we can help you. I hope you enjoyed this webinar series. Check out our website for any other information, continued updates. We do a lot of news interviews and some articles and stuff too. So thank you so much for being our guest, and we'll see you next time.